I was able to catch 33.5 points today on NQ, which I'll go over for you guys. I want to show you my exact thought process and why I was anticipating price to continue to sell off. This is also the trade that I took during Desi's live. I didn't call it out, but I did take this in real time. So first of all, always you have to start with higher time frame. So what I was DMing Desi last night was this. We had buy side liquidity taken after at our all-time high. It was created once again. But more importantly, when you are anticipating for bearish prices, you need a change in the state of delivery, an order block, and a fair value gap. And a change in the state of delivery and an order block is pretty much the same thing because an order block gets created off of a change in the state of delivery. And what all that means is you're going from buy side delivery to sell side delivery or sell side delivery to buy side delivery. So up here we have our buy side liquidity swept, and then we have a displacement down, creating our market structure shift once this swing low gets broken right there, and that's also where our change in the state of delivery occurs. And now these series or 3 candles right here are an order block. And if I draw that out, you can see that price respected this beautifully. And this is an order block only because we swept buy side liquidity up here. We had a fair value gap get created and we had a change in the state of delivery. How do you spot a change in the state of delivery? You have to have a candle closure below the series or above the series of up or down close candles. So in this case, you want to have a candle body close below this open of the up close candle. If you're more advanced, you don't have to wait for the series. You can wait for a close of the one candle, but I don't recommend anybody who's new to learning this trading like that. It's very advanced. You have to have this very strong drawn liquidity. So you can see that Monday we were bearish. Why? Because the algorithm has flipped to a sell program. You can see that this fair value gap is being respected heavily. Another little gem for you guys. An order block that is created off of an order block is called a propulsion block. So this candle right here, if I mark that out, this candle was created off of this order block. So a propulsion block normally creates the more violent move, and you can see what happened, right? Between this displacement and this displacement, you can obviously tell which one is more explosive. So where are we targeting, right? That's the next question. The framework for a market maker sell or buy model is whenever you have your change in the state of delivery, you are now targeting the original consolidation low or high. So in this instance, it's the low. You can see that we have a bunch of consolidation. This is the lowest low before our change in the state of delivery. We get that move from a sell program to a buy program. So now this is the lowest low here out. Let's make that bigger. This is the lowest low inside of this consolidation before our expansion move. So on live today, I was telling you guys that 826 was my final target for the day, since we did sell off a lot today, but it actually didn't get hit. Now, since we have the framework for the trade, we can anticipate for price to continue lower. Why? Because price is in a sell program. There's no reason for us to question higher time frame analysis, right? When we have our original consolidation low still left, there's no reason for us not to be targeting sell side. But you also don't want to chase price. And what I was looking for and was this 30-minute fair value gap. So I had this marked out on my chart in real time, and I was anticipating some kind of bounce sooner or later. So you can see that this is that 15-minute low, and we have our original consolidation low down here, which is our final sell side target. We have a bunch of relative equal highs up here with an untapped 1-minute fair value gap. Why is this important? Because this candle to the left is an order block. You mark that out. I'll make this red. and you can see that we are tapping into the 30-minute fair value gap, bearish fair value gap, and we also are inside of this 1-minute order block. So what I was anticipating was I wanted to see this order block get violated, and you could see that this fair value gap just got inversed, which is a good sign, and then we failed to get over this 1-minute bearish fair value gap. So that's also what I was looking at on my chart. I didn't short this 1-minute fair value gap. Why? Because I was waiting for the change in the state of delivery, just because we already did get a bounce and we did have relative equal highs above still. We didn't have to go down from here. So I was waiting for extra confirmation. What did we get? Another rejection off of this order block. And finally, right here is where we get our change in the state of delivery. I used these last 3 up close candles right here that created this fair value gap, or this fair value gap, excuse me. And I was waiting for the candle closure below. So I don't pay for the $500 version of TradingView, but I've trained my eye long enough, and that this candle here is a 30-second or 15-second breaker. And I was able to trust this because I was anticipating this candle or this fair value gap up here to stay open. So I'm going to remove some of this stuff. Mark this out. This is our 1-minute bearish fair value gap that I was anticipating to stay as a breakaway gap. So now we have buy side liquidity swept, right here, relative equal highs, liquidity being swept. We have a 30-minute fair value gap being activated or engaged with. We have our 1-minute order block being respected, 1-minute bearish fair value gap being respected as well, and now we get our change in the state of delivery. So what did I do? I placed my order rate a little bit inside of this breaker and inside of this volume imbalance. Like I said, I was anticipating this to stay open, but it didn't have to. So I had my stop loss at this high up here. So I was risking 15 points. I got filled at 46 and a quarter. My stop loss was at this high. What was I targeting? Low hanging fruit. This low, internal sell side before the range low and low of day. So if I play price out, you can see price never goes into that fair value gap. We get this nice break below. ES was dumping kind of hard here, so I really did want to see this 1-minute fair value gap get respected. And if I continue to play price, you can see the bodies are telling the story, the wicks are doing the damage, and shortly after we got our take profit hit. So this is aligning yourself with higher time frame order flow, waiting for some kind of bounce, not chasing price, right? We're not trading inside of here. We're not trying to short this fair value gap. We're not doing any of that. We're waiting for price to tell us when we're supposed to be pushing buttons, right? So I waited and waited and waited. We finally got the algorithm to tip its hand to us, and this is what that kind of trade looks like. Higher time frame order flow, I aligned myself with, waited for 30-minute fair value gap to get tapped, 1-minute order block being respected, 30-second or 15-second breaker being created, volume imbalance here created, and breakaway gap was left open. So everything absolute A+ setup. Yes, you could have held for down here for a few more points. I'm not looking to do that. I would rather have a secure profit. Sometimes you get SMT at these lows, etc. But this is enough to pay your bills with. But I hope you guys enjoyed this video. If you have any questions, let me know, and I'll see you in the next one.